Serv Robotics is a small company, but it is growing rapidly. Nvidia, the leading supplier of high-end graphics processing units, GPUs, plays a crucial role in powering and training artificial intelligence, AI, applications for data centers. Meanwhile, Uber Technologies operates the world's largest ride-hailing platform and also runs the popular Uber Eats food delivery service. What connects these two industry leaders? Uber has partnered with 14 companies that are working on autonomous driving platforms as it anticipates a future where the mobility industry shifts away from human drivers. Advanced technologies like autonomous driving and robotics heavily rely on AI, and Nvidia has even developed its own autonomous driving platform. This shared focus on AI innovation might explain why both Nvidia and Uber have invested in Serv Robotics, a company with a market capitalization of $500 million. Serv Robotics has created an autonomous delivery robot, and between Nvidia and Uber, they collectively own over 20% of the company's outstanding shares. This significant stake suggests their confidence in Serv Robotics' potential for growth. If you're thinking about investing in this company, here's what you need to know. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. Current last-mile delivery solutions are often inefficient. Platforms like Uber Eats and DoorDash rely on human drivers who primarily use cars to deliver food and other products to customers. In a recent presentation, Serv Robotics posed a thought-provoking question: why use 2-ton cars to transport 2-pound burritos? Robots and drones may offer a better alternative. Serv Robotics explains that the cost of developing AI and autonomous technologies is dropping rapidly. As a result, robots are becoming a more cost-effective option over time. In fact, Serv predicts that once robot adoption increases and the business scales, their robots could operate at a cost as low as $1 per delivery. Serv's robots are equipped with Level 4 autonomy. This means they can navigate sidewalks in designated areas without requiring human assistance. Since early 2022, the company's robots have completed over 50,000 deliveries from more than 400 restaurants across Los Angeles. These deliveries were made with an impressive reliability rate of up to 99.94%, making the robots 10 times more reliable than human drivers, according to Serv. The company's newest Gen 3 robot is their most advanced and fastest model yet, reaching speeds of up to 11 miles per hour. Powered by Nvidia's Jetson Orin technology, which integrates the hardware and software needed for cutting-edge robotics and computer vision, the Gen 3 robot is 5 times more powerful than its predecessor. This advanced technology allows the Gen 3 to deliver faster speeds, longer range, and extended operating times, which collectively reduce operating costs by 50%. Under a partnership with Uber, Serv is set to deploy 2,000 additional robots by the end of 2025. This expansion will enable Serv to operate in new regions, including other parts of California, as well as Dallas and Fort Worth in Texas. For Uber, this collaboration is also a win, as the program could significantly lower costs by reducing dependence on human delivery drivers. Serv generated $221,555 in revenue during the third quarter, marking a 254% increase compared to the same quarter in 2023. However, this figure was a significant drop of more than half from the second quarter of 2024, when the company brought in $468,375 in revenue. The decline occurred because Serv completed the last of its services revenue from Magna International during the second quarter. Magna, a $13 billion component supplier for the automotive industry, is Serv's manufacturing partner for the 2,000 new robots previously mentioned. Additionally, the two companies have a licensing agreement in place. Under this deal, Magna paid Serv a fee in exchange for technology to build its own robots for market segments where Serv does not operate. That licensing revenue stream has now ended, leaving Serv reliant solely on its delivery revenue. Unfortunately, that segment of the business is still in its scaling phase. This leads to an important observation. Serv is currently losing significant amounts of money. During the third quarter, Serv reported $8.3 million in operating expenses, the majority of which was allocated to research and development. Given its modest revenue, Serv posted a net loss of $8 million for the quarter, bringing its year-to-date net loss to $26.1 million. As of now, Serv has $50.9 million in cash reserves. At its current rate of spending, this cash cushion is expected to be depleted within the next 18 months. To address this, Serv established a new at-the-market stock offering facility in November. This facility will allow the company to sell additional shares and raise up to $100 million. However, issuing new shares would significantly dilute the value for existing investors. Serv became an independent company in 2021 after spinning off from Postmates, which was acquired by Uber. Despite this separation, Uber still holds a 12% stake in Serv, making it the largest investor. Nvidia joined the party in 2022, owning 8%. But here's the catch. If Serv keeps issuing new shares, both Uber and Nvidia risk dilution of their stakes unless they keep investing. Serv's current price-to-sales ratio is a staggering 196, 6 times Nvidia's. Wall Street predicts Serv could hit $13.3 million in revenue by 2025, thanks to 2,000 deployed robots, a massive jump from the $1.9 million expected for 2024. That gives Serv a forward ratio of 31.7, still pricey. Investors eyeing Serv should tread carefully and only invest what they can afford to lose. Yet, Serv sees a massive market opportunity in robot and drone delivery, potentially reaching $450 billion by 2030. If they succeed, even a small investment could yield significant returns. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.